Good afternoon and welcome to GrainTV. It's April 10th, 2013. I'm Logan Burgess. Joining me to my right here is Brock Shimano. Well, today was the big USDA report, the April WASDE report. Let's jump into fire tip right now and see how the grains closed the day out. As we can see here, we had May corn picking up 4 3/4, soybeans down 2 3/4, and Chicago wheat down 12 on the day. You know, Brock, certainly not really the volatility that we're used to seeing here over the last couple months in the WASDE report. And corn was the big story here, coming on the heels of that March 1st quarterly grain stocks report that really shocked the market lower. It seemed like corn, though, found a little bit of footing here today.
Yeah, we did get a little bit of a nice uptick again here today. That's a few days in a row now.
Right.
I think really what was driving it was the ending stocks number. It didn't come out as bearish as everyone was thinking.
Yep.
The average of the analyst guess, if you take a look here at this table, was for around 812 million bushel ending stocks for this year. We only came in at 757 as reported by the USDA this morning. That compares to March where we were at 632. So not... we did get a big revision by 125 million bushels to the upside, but not nearly as big as what the average of the analyst guess was expecting. Soybeans, no revision there on the ending stocks, and wheat, we only saw a 15 million bushel increase on the ending stocks for wheat. So not big stories for soybeans and wheat, but corn was really driving the market here today.
You know, if we jump into fire tip here real quick, let's take a look at a 5-minute chart here right after the report came out. This is a May 5-minute candlestick chart here, and as you can see, right here is the first bar when that report hit. You can see that initially, the computer traders in this market saw that as being a lower number than expected, and we rocketed higher. But then we pretty quickly faded that, retraced that here, and then started to kind of find some footing. And as you can see here, we really had a nice little drift higher here to close the trade session. You know, certainly I think this is supportive of price action on old crop corn. It seems like given the action we've seen over the last couple of days, this could be a short-term bottom in old crop corn. If you're still sitting on some of those bushels, it might be time to see if this market can drift a little bit higher, retrace some of the ground that we lost in the March 1st report. I certainly don't think we're going to retest the area that we started from there. I don't see old crop reaching 720 again, but certainly could see a little bit of a retracement here today, just given some of the balance sheet numbers that we saw revised by the USDA.
You know, I'm right there with you, Logan. I do think that was a short-term bottom that we saw late last week around that 620 area or so. I think that will definitely be support as we move forward. I do think we'll also drift higher here, moving further out in time. But yeah, if you take a look at the balance sheet numbers here, the feed and residual was decreased by 150 million bushels. You know, I was kind of surprised we didn't see a larger decrease in the feed residual number there, but we did get that 150 million bushel decrease. Exports, another number that got decreased by about 25 million bushels. That was right in line with what we were expecting here at Grain Hedge. But I think the big number that kind of shocked us here was the ethanol number being increased by 50 million bushels. We were kind of expecting a slight revision lower in the ethanol number.
Yeah, you know, based on the pace of ethanol production here throughout the marketing year, that is what we are looking for. And we did get EIA ethanol numbers out today, and you know, accordingly, they were exceptionally strong here. If you see here, the most recent red bar, that is the value from last week's production, 854,000 barrels per day. That's a marketing year high, and as you can see, a sizable increase from what we've been seeing over the last couple weeks. Certainly what's driving this here is the ethanol crush margin right now. With the price of corn getting slashed $1 a bushel, we've seen that margin really appreciate, give those ethanol producers an incentive to crush more corn, and ultimately, you know, we saw that reflected in the USDA report today. They're now looking for 4.55 billion bushels of corn going to ethanol in the current marketing year. We did up our forecast a little bit here, but we're still 50 million bushels lower than where the USDA is standing right now. You know, ultimately here throughout the remainder of the marketing year, what's going to be driving this is that crush margin, and low corn prices are certainly very good for giving the incentive to those plants to blend ethanol.
You know, another number that did get revised was that export and sales number for corn. That was down by 25 million bushels. That was right in line with what we were thinking. But of course, we're going to have to continue to watch that as we move throughout the marketing year here. And speaking of export sales, we get that report out tomorrow morning. For old crop sales, wheat, the expectations are for 100 to 250,000 metric tons. For corn, 150 to 600,000 metric tons on old crop. And for soybeans, 175 to 500,000 metric tons on the old crop. And of course, we'll tweet those numbers once they do come out. At GrainTV is where you can find us on Twitter. You know, check us out on Facebook or get a hold of us at 877-472-4607.
Have a good one.